And that's a very, very important lesson that I want to talk about, because what's the difference between averaging into the position or averaging down on a losing position? Good morning. I hope everyone had a really good trading day and the weekend. So Facebook, so I'm in Facebook right now. Facebook had a really good run. This dropped to the VWAP. I bought some at 330, popped up, and I'm still holding some and see if it can potentially go back up to 332. This is a trade that I learned from Brian, that the strongest stocks pull back to the VWAP could be a good buying opportunity. So I have that one. Apple was a really nice reversal that we took in the chat room. I mean, again, I got the idea from Brian. So Apple really sold off, and the S4 was an area that for 2 minutes it did bounce. I saw a doji, a jump in at 148 to the VWAP, added more. This is just lightning bolt pattern that the lightning bolt pattern that Brian loves. So that's what I did. And Lucid was the one that we traded a couple of times. Eventually made money on that. So Lucid was gapping up. This is a competitor to Tesla. In the last couple of days had a monster run, and I didn't notice that it's actually very, very extended on the daily chart. And that was one of the things that you should notice, that when the stock has such a monster run, you got to be careful, because a pullback to the daily chart is something that you can expect. Anyway, in the pre-market was came above the VWAP. It was really nice for opening range break up. I jumped in a little bit too early because I got the FOMO that came down to make the doji, and I kind of jumped in the first 1 minute. It really never had this 1 minute opening range break up, and it was kind of extended from the VWAP. I added, and then I got a stop down at the VWAP, and that was the moment that that was the first loss that I had. It could potentially flip it to the short because it really nicely lost the VWAP, but again, I was having a bad day, not a bad day. I was having a loss on it, and I just didn't want to flip the position. And then we tried to catch a reversal on it at R1. That's on 5-minute chart. I mentioned in the chat that the first place that can bounce is this moving average in a 5-minute chart. They have a tendency to bounce. I just jumped in there, scalped it a little bit, didn't like it. Try to do it again here, and there's a lesson here that I want to talk about. So we see the couple of bottoms here, and we were in this 5-minute moving average. A stock was strong in that moment. It still was 3-4% up, and I really thought that there is opportunity here. I went long. It came back on. I added a little bit more, but it came back toward the low of the day, and I got stopped out. And the lesson that I want to talk about here is, sometimes when you don't get a good entry, you go small, and then when you get a better entry, you add. But you have to get a stop out. If I was keep adding here and adding here, then it's not averaging in. It's actually averaging down on a losing position. And that's a very, very important lesson that I want to talk about, because what's the difference between averaging into the position or averaging down on a losing position is the technical still was in play. My level was here about 37.85, and I really wanted to get a bounce from here. When it dropped this one, I lost this level, then I have no reason to keep adding into that position, because the whole idea is not in play anymore. And if I were doing that, I would have stuck in this big flush, and I probably had to add more and add more. You eventually run out of buying power. But anyways, we saw the previous day close. We tried to catch a bounce from it. I tried to catch a bounce. I couldn't hold it because I jumped into another trade. And after that, it lost the previous day close very, very nicely. And eventually, we got a bounce from S3 level, which is 35.79. We got a bounce from here, popped up all the way to previous day close from 35.70 all the way to 38.7. I added a little bit more, didn't get the bounce, and I got a stop down at break even. That was Lucid. Apple, I had a really nice bounce. We talk about it. And ABVC was another one that was really, really nice. Brian mentioned that ABVC. Really popped up at 10. I went long, added more at 10.20 all the way up to 11.75, and then there was I had a little bit of shares left that it did drop, and I got out of it. And overall, turned out to be a very decent day for me. I can't complain. So, Brian, what did you do?
Again, we just with Lucid, we already talked about, and ABVC. I took it twice actually. First time was a bit of a disaster because I took it into a halt, expecting it to open up, and it didn't. So I had to get out of it at a loss. But then I played it to the upside with you. Yeah, it was kind of very unusual that the stock on a first halt drops. But yeah, I played it back as it popped back up there. So I made up most of my loss on that. So Facebook, I just had long calls. Apple, I'm short puts. I played MTTR as well. So I got that nice pop at the open on MTTR through 25. Yeah, that was probably one of my better trades of the day.
Very nice.
Yeah, so that's about it for my trades today.
Yeah.
You're going to talk about a meetup, the meetup in
meetup,
Vancouver?
December 3rd, yeah. So we have a meetup in December 3rd in Vancouver. And yeah, if you're interested, there's a forum post, and maybe Abiel can post it in the YouTube as well. Everyone welcome, bring friends and family, see the office, and we can do something in the afternoon. In the evening, there is an event that we can go for some music and some socializing. It would be very interesting to be in there. All right, guys, thank you so much.
Cheers.